Welcome to another episode of Financial Insights in Minutes, where we summarize today's top financial news.
Today, we delve into global recession fears and their implications for the housing market and beyond.
Get ready for expert insights as we unpack everything from inflation data to geopolitical tensions.
Let's see what's on today's agenda.
First, Jeff Snyder reveals how U.S. recession fears trigger global economic repercussions. Next, Zelman discusses affordability challenges and low inventory in the housing market. Then we predict market reactions as PPI data could pivot investor strategies. Hanke analyzes Ukraine's invasion of Russia and its economic implications. After that, we explore 7 market warnings suggesting underlying shifts inevitably affecting investors. Finally, Chris Holes from Life 360 talks about their surge towards 1 billion users amid competition. Welcome to Eurodollar University on YouTube. Today's riveting topic: how could fears of a U.S. recession trigger massive stock market turmoil all the way in Tokyo?
That's right. And let me tell you, this isn't just a U.S. thing. Jeff Snyder dives into a global perspective on the current economic landscape. With his expertise in global finance and the Eurodollar system, he knows a thing or two about these interconnected economies.
So what's the core thesis of Jeff's video?
The main point is that the world is experiencing a synchronized recession, not just the U.S. Jeff argues that national economies are interconnected, and thus problems in one can swiftly ripple across the globe.
All right, let's break down those key points. What's the first one?
Jeff highlights that this isn't just a U.S. recession, it's a globally synchronized downturn. The entire world is feeling the impact.
Interesting. What are the market reactions telling us?
According to Jeff, the stock market crash in Tokyo shows how fears over the U.S. have real repercussions globally. It's a chaotic game of dominoes.
And what's the significance of the Eurodollar system?
It's crucial. Jeff explains that this system is the foundation of international finance. When one economy sneezes, the others catch a cold.
What about historical context?
Absolutely. Jeff delves into past global recessions, showcasing how interconnected systems influence economies in a synchronized manner.
Now let's talk predictions. What does Jeff think lies ahead?
He suggests we should be vigilant. With multiple economies displaying recessionary signs, it's crucial to keep an eye on those macroeconomic indicators.
So what are Jeff's predictions?
He predicts that if the U.S. officially enters a recession, it could confirm fears about the severity of global economic challenges.
What about market volatility?
Jeff warns that we could see serious fluctuations in financial markets, especially if bond yields keep dropping. That's when the real trouble starts.
What's the big takeaway from Jeff's insights?
The core message is clear. We need to prepare for significant economic challenges ahead due to the interconnectedness of our global systems. Ignoring this reality could lead to bigger troubles.
Any calls to action for viewers?
Definitely. Jeff emphasizes the importance of keeping an eye on macroeconomic signals to navigate these turbulent waters effectively. Stay informed.
Welcome to Thoughtful Money. Today's deep dive: what's really going on in the housing market. We're joined by the insightful Zelman, co-founder of Zelman Associates. Get ready for a wave of housing wisdom.
Absolutely. Ivy's extensive experience in housing market analysis gives us a clear lens to understand the chaotic landscape. Prepare for some tension as we navigate through affordability, inventory, and more.
So Ivy, what's the core takeaway from your analysis?
The central thesis is that the housing market is in a tough spot. Affordability is stretched to record highs, inventories remain low, and we're seeing the lowest transaction volumes since past recession periods.
Let's break down those key points, starting with affordability. What's the current situation?
Home prices have skyrocketed, making it nearly impossible for many to enter the market. The affordability index is above historical trends, and rising mortgage rates only add to the woes.
And how about inventory trends? What's happening?
Inventory levels are historically low, though certain areas are beginning to see an increase. This is a mixed bag as it indicates a possible shift in the market.
What about the impact of interest rates? Are they doing their job in cooling off the market?
Rising interest rates are pushing buyers away. Interestingly, despite this, home prices have not seen a significant drop, mainly due to low inventory and an influx of cash buyers.
What predictions can you share for the future?
As inventory increases, we may see speculators sell their properties, which could ameliorate some pressure. Rental markets might also change as many shift from owning to renting.
What adjustments do you foresee happening?
We could see a rise in listings from those who can no longer afford their homes, leading to increased cohabitation or even multifamily living arrangements.
Any final thoughts on how we can navigate this tumultuous housing landscape?
The key takeaway is the necessity for innovation in our approach to homeownership and investing. It's critical to adapt to the changing tides in order to find balance in this often tumultuous market.
Welcome back to Trade Brigade's pre-market prep. What a whirlwind of market activity yesterday. As we gear up for today, it's all about the Producer Price Index. That's the PPI, if you please, expected to release shortly.
That's right. With inflation data on the horizon, it's essential to analyze what this could mean for market trends, especially with inflation affecting consumer sentiment.
So what's the main focus of today's discussion? How are we viewing the PPI impact on our economic landscape?
Today's core thesis is that the PPI figure will provide an early insight into inflation, as it could set the stage for tomorrow's Consumer Price Index release, which many anticipate will be pivotal.
Let's dive into the key points. What's going on with the inflation data we're expecting?
The two crucial reports, PPI and CPI, are intertwined and will affect market expectations. A higher than expected PPI might spike fears of rising prices.
And speaking of consumer sentiment, what did we learn from Home Depot's performance?
Home Depot's lower forecasts signal that consumers are indeed cautious, hinging everything on how inflation appears in today's reports.
What does this all mean for the Fed's approach?
Exactly. Depending on what today's reports reveal, we might see the Fed pivot on rate expectations, which would significantly sway market direction.
Now let's shake the crystal ball. What are the predictions following the PPI release?
There's a potential for significant volatility today. Market reactions can swing based on how the data differs from consensus.
Interesting. Any thoughts on how investors might react?
Investors could pivot to cautious strategies. During inflationary periods, there's often a flight to safer stock categories.
So, what's the takeaway from today?
Today's PPI reading is vital. It'll inform our direction moving forward into tomorrow's CPI report. Keeping an eye on those numbers could save you from choppy waters ahead.
Any closing thoughts on strategy?
Absolutely. Anticipate fluctuations and be ready to adjust strategies quickly based on the data released.
Welcome to David Lin's channel. Today we're addressing a shocking new development. Ukraine has invaded Russia. Joining us to break this down is Steve Hanke, a sharp economist from Johns Hopkins University. Time to navigate through these waters.
Absolutely. This incursion has not only surprised many, but also has significant implications for the global economy. Steve's expertise makes him the perfect guide to unpack the situation and its fallout.
What's the main idea behind this unexpected move by Ukraine?
The core thesis outlines that Ukraine's ground incursion marks a significant military escalation, raising concerns about both countries' economic futures and the broader implications for international relations.
Let's dive into the economic impact. What numbers are we looking at?
Over 133,000 people were displaced. Also, the ruble dropped nearly 3% recently, which is noteworthy. Ironically, despite sanctions, the Russian economy is apparently holding strong.
What do we know about Western involvement in this situation?
Western arms have played a pivotal role in Ukraine's surprise actions. This isn't simply an accident, it's strategic, which suggests NATO had a hand in this.
Now let's move on to predictions. What does Steve foresee?
Well, a big counterattack from Russia seems inevitable. This development is also likely to escalate economic tensions, especially as we approach the elections.
What are the predictions Steve laid out for us?
He predicts significant counterattacks from Russia, which could escalate the conflict rapidly. The geopolitical landscape is on shaky ground now.
Any thoughts on Europe's situation?
Europe is feeling the pressure from the sanctions against Russia, and it could lead to worsening economic conditions. The fallout could ripple globally.
To wrap up, what key takeaways should we keep in mind?
This situation calls for vigilance. The unfolding events now will impact global economics and geopolitics in a major way. As always, staying informed is crucial.
Final thoughts on U.S. foreign policy implications.
Yes, the U.S. approach could greatly influence both the conflict trajectory and economic stability, especially as the election year looms. Keep an eye on those developments.
Welcome to Figuring Out Money. Today, let's dive right into the strange signals coming from the markets. There's a lot to unpack regarding 7 warning shots we need to keep in our back pocket.
Indeed, this market environment is creating some unusual patterns that many might overlook. Our guest today is a true expert in technical and intermarket analysis, making today's discussion especially critical.
What's the core message of today's market briefing? What should we be keeping an eye on?
The main thesis is that unusual signals from gold military stocks, oil movements, and the bond market suggest there are deeper shifts in the economic landscape that we must not ignore.
First up is gold. What's happening there?
Gold is reaching new all-time highs, signaling increased safe haven buying. That's definitely a warning sign.
And about those military stocks, what's the situation?
Military stocks like Lockheed Martin and Northrop Grumman are breaking out to yearly highs, highlighting a surge in defense spending.
Oil also appears to be in a state of confusion. What's going on there?
Certainly, oil is bouncing between highs and lows, and its volatility suggests potential economic turmoil ahead.
What's the bond market saying?
The bond market shows a strong breakout, which usually indicates a flight to safety. Plus, there's talk of potential rate cuts from the Fed.
And how are sectors like utilities faring?
Utilities are currently leading the S&P 500, signaling cautious investor sentiment towards safer assets.
What do the experts forecast?
Expect heightened market volatility, especially as broader economic downturn indicators start to show more clearly.
And how should investors react?
Investors will likely continue to prefer safe haven assets as uncertainty prevails in the market.
What's the final takeaway from today's session?
Investors need to remain vigilant and monitor these abnormal signals in the market closely. Staying informed can help better navigate potential upcoming shifts.
Ahoy there! Welcome to Public App, where we dive deep into the latest innovations that are shaping our world. Today, we're steering our course towards a company that's making waves in the location-sharing ocean, Life360. Joining us is Chris Holes, the co-founder and CEO, who's navigating the path to a whopping 1 billion users.
Exactly. Chris is not just at the helm of a successful app, but is also tackling the challenge of changing perceptions around family location tracking. With a background in technology and a vision for safety, he's here to blow the lid off all the misconceptions. Let's anchor down and discover what Life360 is all about.
So what's the main idea behind Life360? Why is this app making such a splash?
The core thesis is that Life360 is redefining the family location tracking narrative by showcasing it as a tool for safety and connection rather than an invasion of privacy. Chris stresses how essential it has become for families to stay connected without feeling surveilled.
Let's unpack some key features that make Life360 stand out. What unique offerings do they have?
Life360 boasts features like instant alerts for arrivals and departures, SOS alerts during emergencies, and even automatic crash detection. It's all about safety, but also about keeping the family close.
How's the growth looking for Life360? Any exciting updates?
Chris shared that they've just celebrated their first quarter on the NASDAQ with robust financial results. With a solid demographic tailwind and considerable international growth, things are on the upswing.
So what about the infamous creep factor? How is Life360 tackling that?
The stigma is fading. Life360 is reframing location tracking as a practical and useful utility. Users are discovering it enhances their family bonds rather than invading privacy.
Chris shared a personal touch with elder care. What are they doing in that space?
Absolutely. Life360 is gearing up to launch features specifically designed for elder care, giving families peace of mind while caring for aging parents.
And what about monetizing this great app? Any innovative strategies?
Chris hinted at ad partnerships and new offerings to increase revenue without compromising user experience. They're all about building trust before diving into deeper monetization.
What does Chris foresee for the future of Life360?
Chris is optimistic. He believes they could reach 1 billion users soon, With the right mix of innovative features and market expansion,
Any interesting predictions about the market dynamics?
definitely. As family structures evolve, the demand for tech solutions that enhance family connections will significantly rise, opening doors for partnerships, especially in elder care.
To wrap things up, what are the big takeaways?
Life 360 is clearly carving out a niche that prioritizes family safety and togetherness. With innovative products on the way, their growth path is illuminated.
Final thoughts on the future of Life 360.
Chris envisions a robust future where Life 360 leverages user trust to launch more innovative products. The focus will remain on enhancing family relationships through technology.
In this episode, we explored the synchronization of global recessions and affordability challenges in housing. Jeff Snyder's insights about interconnected economies were backed by Ivy Zelman's analysis of market volatility driven by these conditions.
Steve Hanke warns that geopolitical tensions could precipitate further economic turbulence. Despite varying perspectives on safe haven strategies, there is consensus on the necessity for vigilance amid these uncertainties.
Thanks for watching Financial Insights in Minutes for August 13th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.